it's November 25th, and today, oh by the way, this is the video log that takes $30,000 to $1 million. It's definitely going to happen. Now, let's see. It's 11/25th. It's 25th, November 25th. No redos. No editing, no redos. And after I show you the account and update you on what's been happening, we'll talk about more exclusively one event, and that is the rolling call options that I'm buying right now. And that's kind of a strange thing for me to do. What the hell am I doing? So I'm going to explain my reasoning and why that can be beneficial sometimes, instead of just buying outright the, what's the right word, asset, equity, security. Buying outright the security that you're trying to bet on. Okay, so here is the account. It's a sad day, sad affairs, but I'm sitting at $74,200 as the Dow and the S&P are making new all-time highs. I'm going backwards, and here's why. I'm going backwards because of my Apple position. Even though it gained $687 today, I was knocked down $425 by my option plays. It's kind of my very, very expensive insurance at this point. I never thought that Apple would climb so fast, so quickly to such great heights. So there we go. Lost some money on that. The XK, of course, had a monstrously horrible day, and I still haven't scaled out of that. So this is the point where I should be adding more in, but I'm not, and that's because I'm doing the rolling calls, and I'm going to explain to you why I'm doing that and why I'm not adding any more EXK at this point. And I'm just going to play with the amount that I have right here. These 900 shares. Probably not going to add any more unless it drops down to like supremely unreasonable levels. Right now, I think it's fair value. So I don't want to sell, I don't want to buy. I should have sold actually when I thought it was a bit overvalued, right over here at 242. Okay, but I didn't. Mistake. Now, moving on. The rest of the account, nothing much. NYMT, oh yeah, Chemical dropped down huge. And actually now, well, Energy Fuels as well, negative $60. Chemical, negative $96. And now I'm actually an owner of 1,200 shares. That's a lot. That's a total of $11,256 if you want to do the math at today's price. I do have options sold against 500 of those shares, and I have another $2,550 waiting as collateral to buy more options if the price should drop low enough to the 9 or 8.5 or $8 level. So far it's holding up against that, and that's fine. As long as Chemical is between $9 and $10, I'm a happy camper. I can make money off of that. It's great. Here are all of my options that are left. Recently, I was assigned to buy 300 shares of Chemical, so here it is. There's the put assignment. $2,850 going into Chemical. I haven't sold calls against it yet. I believe that it's gonna spike up a little bit, and when it does to about the 950 something level, that's probably when I'm gonna sell my calls. Probably $10 calls or $9.50 calls. We'll see. I haven't decided yet, but for now I'm keeping them. And that's it for the account. Now, let's take a look at the rolling options, right, that I'm talking about here. DEM, by the way, is the Dividend Emerging Market Fund. So here it is, the SLV. Today, negative $55. What is it? 5 contracts. Now, first I bought 4, and then I bought another one, and I'm probably going to buy another one pretty soon. But what I'm going to do now is I'm going to do rolling option calls, right? So what that means is that if I had bought, let's say, this Friday's call, let's say SOV call, let's say $15 strike price, right? And then instead of buying another one for the same expiration date, I buy one that's for the next week or even next month. okay, at the same strike price. And so that way, I get exposure, longer term exposure of SOV, the underlying security, and I can keep doing this ad infinitum, right? Indefinitely, forever. So what's the benefit? Like, why would anybody be crazy enough to do this? Why not just buy SOV? Well, that's a really good question. That's a really, really good question. So there are reasons. Okay, there are reasons. For one, you can get the price action of many more shares that you could buy with your call option money, right? So let's say you have $1,000 to play with, and you buy some call options here for $600, and then you keep buying some more options later. Now with that $1,000, if silver goes up 20%, if you had invested in SOV, you'd get roughly 20%, so that'd be $200, right? But a 20% price movement in SOV, if you bought options, you know, $1,000 you could buy, like, you could have the action. Let's go into the account here. You could probably buy the action of 5 contracts, 500, so like 10 times. You could probably do 10 times more. So you'd get, if you had it all in options, you would get the price action of around $2,000 instead of 200. So why doesn't everybody do this? Well, not everybody does it, and not everybody should do it. In fact, it's very risky to do it. And it's because if things don't work out, if the price doesn't rise by the necessary percent to not only cover the strike call, but also cover the premium that you had to pay for the privilege of playing with that many shares, then you lose everything. You lose everything that you bet. It's all $1,000, right? All of them are gone. So here's how you do it, right? So let's go into the browser. I'm going to view all options, right? So now I'm going to just be buying calls. So let's say the November 29 call, $15 strike price. That would be this, $79 to buy this. Play with 100 shares. 79 cents times 100, $79. And that's for this Friday. And now this week, if I decide to buy another one, I would actually go to the December 6th, and I'd buy the $15 option, which would probably be about the same price. Right now it's 81, but in a few days it'll drop down if the price stays around the same level. And then it just keep going like that, you know. So currently I have bought, I believe, the March or the April. Let me see. The April. So I bought the April calls. So I have 5 of them now. I used to have 4, now I have 5. But now what's going to happen is if the price decides to go down during these months, I might buy the June with a little bit of longer duration. And you just keep doing this until the price eventually spikes, if it does. Now, knowing what I know about the silver market, which is not all that much, okay? I know a little bit. I'm expecting, for reasons that probably not going to be going too much into depth for, but for supply and demand reasons and for fear of market drop speculation reasons that I've outlined in different videos, I'm doing, I'm, I'm betting on the price of silver going up by at least like $2 by this coming April. So for me, if that doesn't work out, I think that there's very little chance that the price of silver will go up in June and July and so forth during the summer into the winter. And so for that reason, I'm not that concerned about doing rolling calls like that. But that's what rolling calls means. Okay, you just keep buying call options like this, and eventually, you're gonna probably lose more money than you potentially can gain. Um, if, for example, you decided to do rolling calls on the S&P 500, you'll pretty much always be better off. Well, in the very long term, if you did it in the last 9 years, you'd probably be better off. Although they keep getting more expensive, so you have to use your winnings to buy more expensive premiums. But you probably be in a more winning position. in the last 9 years because it's been almost a straight bull market. But anyway, over the very long run, it's not beneficial, right? You end up eating away at your capital, even if you're betting something as safe as the S&P 500 or the Dow Jones. So I don't recommend anyone actually do this, and it's very risky, and it really helps with if you're trying to time market. But if you're not trying to time the market, just buy the underlying security, whatever you think is going to go up, and that's it. That would be my advice. Although I'm not a financial advisor, and you should do your own due diligence, blah 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 blah. Don't make sure that you understand the risks, etc., etc. You could lose all your money. All right. So that's what rolling calls is. This is my account. I'm doing silver. Hopefully it pops up. It's been a losing trade so far, but it's only been a few days, a week into it, so I'm not that scared about it. I'm looking at December, January, February, March, and to April 17th. There, that's a lot of months for the silver to move. So hopefully it moves in my direction. All right, I think now I'm gonna lend it, and end it right here for now. Hopefully y'all are making more money than me. Shouldn't be too hard to do because I've been losing to the S&P 500 over the last few weeks here, couple weeks. So um, hopefully that is the case. And with that said, I think that's it. Peace out. Oh, stop recording.